Those are going to change because everything's going to change as of the January 1st date.
Hi, Corey Werner with Core Real Estate. Thank you for tuning in and watching our little segment here. Today with me I have two awesome people from RBC. We have Charlene Nosh and Christopher Bogdan. And today we're going to talk about some information regarding down payments for mortgages, what you need to have, and all that great stuff when someone's trying to buy a house.
So myself, I have been with RBC for 19 years, and 19 of those years I have been lending as a mortgage specialist. So
perfect.
I help clients in Belleville, Esterhazy, Yorkton, and sort of area.
Okay.
Yeah.
Awesome. And Chris?
Perfect. Well, I'm new to the RBC team. I've only been a financial planner with the branch here since January. Worked in the financial services industry for quite a while, so I have a diverse background. But you know, I'm an accredited financial planner and really work closely with clients and helping them buy houses. You know, coming up with their financial plans and doing all kinds of retirement reviews for them. So yeah,
it's perfect. I mean, we've done quite a bit of business together, so it's great. We realize, you know, RBC has a pretty good team there, so it's awesome.
Thank you.
Getting people into their homes, right?
That's the goal, right?
Exactly, that's the goal.
The first topic that I kind of would like to go over for our viewers is someone that's new, wanting to get out of a rental situation and actually becoming a homeowner.
What we would do, Corey, is we would have you send your clients in to see us. They will sit down with myself first and foremost in regards to getting pre-qualified. So part of that being we do income verification, so we make sure they can afford the payment. We do a credit check on them to make sure that credit history is all okay, there's no blemishes there, and make sure again that they have at least a 5% down payment. So if they have a 5% down payment, we have to verify where those funds are. If during that process they don't have a 5% down payment, that's where Chris comes into play, whereas we work as a partnership, that if, you know, get them started on track, whether it's an RRSP or tax-free savings or whatever the case is, but I send them down to see Chris to get that savings in place.
Okay.
Once that saving is in place, they would come in to see me again, get them sort of pre-approved or re-qualified, and send them back to you guys to do some house hunting.
Okay, perfect.
Yeah.
So then if they do have some money set aside in an RRSP, can they withdraw that then and use that as a down payment?
they can. It's a great program, part of the home buyers program. Does enable people to use their RSPs for that first-time home buyers. There's a lot of rules and regulations around it, whether they qualify as a first-time home buyer. It's not necessarily their first home. They just have to qualify as a first-time home buyer. Okay. But my biggest recommendation for that is, come in, talk to me, go and talk to your accountant as well, because there may be some tax consequences you want to look at, and repayment schedules and timing and that kind of thing. So really it's more complex than it should be, but that's just the way it is.
Right, because I guess if they withdraw their RRSP, they have to claim that as income then.
Normally, yes, but this way there's a special form they fill out that they send into the CRA, and they don't have to make that withdrawal all done at once. They can do more than one, but there is some timelines in place saying they have to do it by this date and this time.
Okay. So if I have some parents that want to help me out with the down payment on the house, how would that work? Like if they wanted to give me the money for the down payment?
Yeah, as a first-time home buyer, or even if you're a second or third-time home buyer, if family, so mums and dads, brothers and sisters, immediate family members, we allow a gift of a down payment. Okay. At RBC, we have a generic or a form letter, a form gift letter that we have, so the clients don't have to do any gift letters themselves. I would help them with that gift letter and show them how to get everything filled out.
Perfect. And does that money then have to be in the person's bank account for so many days before
No.
they can actually use it?
No, not
okay.
at all. We just have to, so in two separate scenarios, so where the gift of a down payment, I always just have to verify down payment where it comes from.
Okay.
So a gift of a down payment, that gift letter that I have is formal enough. In regards to back to the clients that have their own down payment money, it's best that they do have it in their account for 90 days. So there's a 90-day track record that we always have to look back in regards to where those funds came from.
Okay.
So, and in some cases it would be the gift letter, right? Yeah.
What if someone, wants to get into buying a house but really hasn't established credit? Like, what are some of the things that they could do to get them, some credit history?
So some of our children that, are coming of age, so 18, 19 years old, if you are a Canadian citizen, and, some of our children are getting to that age, you need to have at least 2 years worth of credit history and 2 trades. So what I would mean by that is when you're buying a house, you not only need Royal Bank approval, but you need CMHC, the Canadian Mortgage and Housing Corporations, their approval. And again, we have to have some sort of history, some sort of track record to know that you have been making payments and you've been making payments on time.
Okay.
So that's where a 2-year history would come into play. So as our young kids are going off to university, getting their first car loan, we would want them to have at least a credit card of some sort, so that way there's some track record that we've got some credit history in place for them, because we have to go by some sort of credit history for them. Yeah.
Okay, awesome. If we all appreciate all these new immigrants and stuff coming to Canada,
Correct.
Really interesting to hear the stats on, the population and who makes up the population. So we thank all these newcomers to Canada. And I've experienced quite a few
Myself
buying
as well.
houses. So
Yeah.
it's really awesome that they're rooting into Yorkton and making it home here.
Absolutely.
So I guess if there's a newcomer coming to Canada, what are some of the requirements from RBC as far as qualifying them?
Okay, so newcomers to Canada are a little bit different in regards to 2 things: the down payment and the credit history. Okay, so as long as you're new to Canada, less than 5 years, you can have that little bit of limited credit history, okay? Because we know you're new to Canada, you might not have that history in place as we do as being here all of our lives, right? So sometimes we look at non-traditional ways of credit history, whether they've had a landlord lease payment for the last year, SaskTel payments for the last year. But again, limited credit history for newcomers to Canada is not always as big of an issue. Okay, we can sometimes get around that, have different ways to help them get into their first time homes here in Canada. The down payment, though, that cannot be a gift of a down payment from families, okay? That has to be coming from their own resources. So they have to, when they come to Canada, again, kind of get their bank account set up, come and see Chris, put some money away in savings, things like that, so that they're ready to have that down payment put in place. Okay, so those will be the 2 big things. Limited credit history is okay, but they need to have their own down payment resources, and hopefully they've got their PR cards as well, their permanent residency cards. We like to see that they're going to be a permanent resident here in Canada.
Right.
Okay. Yeah.
Perfect. Make Yorkton your home. That's right.
Absolutely.
So interest rates. There's a lot of things, I guess, on the media as far as, what's happening with the interest rates, qualifying people. Can you maybe share some light on what's going on in that industry?
Sure. So we'll talk about interest rates first of all, right? So right now they're still really good. The interest rates are phenomenal.
I can't believe what my parents were paying.
I know, probably 18, 21%.
I was just like, my goodness.
Insane, right? I don't think they'll ever get that insane anymore, but who knows, right? But the economists over the next 18 months or so are talking about anywhere from a 1.25% hike to maybe 1.5% hike. So maybe about 3 increases over the next sort of, like I say, 12 to 18 months. So again, even in that case scenario, still pretty decent interest rates, but it's a really good time to buy, being that we've got, historically low rates
Right.
today,
Still do,
right?
For sure. Yeah.
So then on a second topic, we'll talk about the qualifying rates.
Right.
Okay. So what OSFI and our federal government, Minister of Finance, has put in place for us is, so I'll give you a couple of examples and please make sure you understand, right?
Okay.
So today's 5-year fixed rate is 3.49%, okay? In the background of the applications, what we do is we qualify all of our clients based on an interest rate of 4.89%, okay? You still get the actual rate of the 3.49, but we qualify you in the background pretending that you can still afford the payments at that higher interest rate, okay? So now what's happening is OSFI has changed some rules for us coming for January 1st, 2018, okay? So what happens as of that date is, again, so let's fast forward and pretend our 5-year fixed is still 3.49%, okay? So as of January 1, we qualify you in the background based on 2% higher than what the actual 5-year fixed rate is, or the 4.89, okay? So again, 3.49 is today's 5-year fixed, so 2% over that would be 5.49. So as of January 1, if they don't change the qualifying rate, we're now going to be qualifying you at the 5.49 versus the 4.89, okay? So come January 1st, it's going to be harder to qualify for a mortgage, okay? And that OSFI regulation is not only just on the CMHC and Genworth insured mortgages, it's now on everything. Line of credits, everything. So to a homeowner like yourself or whomever that's coming in to do that 80% loan to value to pull out some equity out of their house, it's going to be on everything across the board. Okay?
Yeah.
Makes sense?
Yeah.
Okay.
Yeah. I mean, you hear obviously it would be huge. It would be a huge amount.
Yeah.
When you're looking at, say, Toronto or Vancouver.
Huge.
So I'm sure glad that we have affordable home prices here in Yorkton. All the more for people to move here, right?
For sure. So if I could just add a little bit more on that for you.
Yeah.
So again, if when you come to RBC, what happens is when we do a pre-approval for you, you get a rate commitment for 120 days, okay? So that sits there for 120 days. So people that are getting pre-approved today, that rate commitment is pulling through into the new year, okay? So the important part that I need for you to understand as well is if we pre-qualify somebody today to say, go to Corey, go do some house hunting and come back and see what you can do. If that firm approval, so RBC has them 100% approved prior to the January 1st, and they're going to take possession prior to the January the 1st, we're good, okay? Yeah. But if they come to me after January the 1st and they've been pre-qualified before, those are going to change because everything's going to change as of the January 1st date. So if we pre-qualify somebody today, I need them to come back in after the January 1 to revisit the application and make sure everything is still okay.
All right.
Okay.
So you heard that. If you're thinking of buying next year, you better come in and see Chris and Charlene before that rate change happens.
For sure, because it's going to be significant. It's probably somewhere around that 20% difference change depending on what your purchase price is going to be. So that number is going to change. So
All right. Well, thank you so much for coming and sharing your knowledge and expertise. And we really appreciate you giving the mortgages out to our clients and anyone else out there in the market kind of looking around. So
thanks for having us.
The next time coming over and doing this again.
Absolutely.
A lot of fun,
Good
so.
stuff.
Thank you guys.
Thanks everybody.